Is the euro-dollar trade another popular combination with traders?
Oh yes, it's got. I think it's got the highest turnover of any of the currency pairs. It's got a history going back for a very long time. Before the euro was created, people who backtest systems used the Deutschmark against the dollar, and there's history going back right to 1971. Okay, so a very, very popular pair, and traded more uniformly during the course of the day. And traded well in Europe, at least the last time I saw the stats, traded well in the East, whereas the pound is not particularly traded well in the East.
How volatile is this one to trade?
It's not as volatile as the pound against the dollar, and the pound against the dollar is not that volatile in relation to the pound against the yen. Or the euro against the yen. Those are very volatile currency pairs. Again, my trading partner said the other day, I haven't traded the euro against the dollar for quite a while, and I now remember why. That was his expression. Those currency pairs can move enormously, absolutely enormously. Yeah.
What could you tell us about the euro? How does the euro relate to the US dollar?
I think that certainly over the last little while, we go back to interest rates again. No chance, I don't think, of the rates going up in Europe for a while. They're still printing a heap of money every month. That money printing has stopped in the US, and rates would seem, we'll see what our friend says in the next day or two, but rates would seem to be going up there. So I would have thought that euro is going to fall against the dollar.
Is there a trend or a strategy that you would use to trend the euro against the dollar?
No, not in addition to anything that we've talked about. I pretty much do the same thing. Looking for a trend, looking for some patterns within that trend, yesterday the trend was down, and I saw a perfect Wyckoff upspring, and I took the trade. I know this is a little bit repetitive, but if you are a trader, you pretty much do the same thing over and over and over again. I remember a long time ago, I did a Forex course at the retail level, and a part of the package that the marketing people had was that I would do follow-ups for 3 months on a Friday afternoon. So the people came in on a Friday afternoon and we did the follow-up. And then they came in the second Friday afternoon, and one guy moaned. He said, well, you're doing the same thing as you did last time you were here. And I said, well, we do that all the time. You have got one little plan that you trust, and you play the game over and over and over again, focusing on perfect execution of this one trade over and over and over again. My Gartley patterns, which came out of Profits in the Stock Market by H.M. Gartley in 1933. There's plenty of reference to them on the internet. If you just search harmonic trading, you'll get a whole screed of stuff on them. They're not secret. The Wyckoff stuff is pretty much the same as that. In the stock market, I look for those patterns as well, but because I can actually calculate the fundamentals fairly accurately, I'm more than happy to buy a breakout in the stock market, and I can scan for those breakouts. In the Forex market, breakouts are invariably false. Okay, it's a ruse to push you the wrong way. Okay, so I always like to buy in at support in the Forex market.
So on a final note, are there any pitfalls to try and avoid when trading in currency?
I think the biggest pitfall is the leverage that you can get. And certainly there are many brokers out of the range of the FCA that offer enormous levels of leverage, which mean that if you're right, it's Christmas, and if you're wrong, you're wiped out. That's mighty tempting, because when you sit down to put on a trade, you do all your analysis, you speak to people that should know something, and you say to yourself, well, the only reason I'm putting on the trade in the first place is that I know it's going to go up. So if I know it's going to go up, why not have a big bet? That's the paradox. So I think that start small, just remember about that reptile brain. It likes small little steps. The only way to get around that sort of reptile brain with flight or fight is to actually take small little steps I remember some years ago, I coached somebody to do a marathon, and we took the first week, we put on her, she hadn't done anything before, put on her gym shoes, and in front of the TV, she ran up and down. That was the first step for 5 minutes. And we then did a few press-ups after that, and then she went for a run around the garden after that. 6 months later, she was running the Comrades Marathon in Johannesburg, or Durban. So small little steps, and I think that give yourself 6 months and look upon it as a learning exercise. I think that reading Trading in the Zone at the outset, before you've lost £100,000, would be useful. Reading Reminiscences of a Stock Operator would be very useful. And buying that little book called Zen in the Markets. If you read Eddie Topple's little book, Eddie was a floor trader on the Chicago Mercantile Exchange for 20 years. He really knows what he's talking about, and that would help you along tremendously. Information. Certainly on the stock market, VectorVest will give you all that institutional level information, and then having the self-awareness to stand back and focus on perfect execution is what the game's all about.